Welcome. Today, October 21st, 2025, we're diving into the new rules for cryptocurrency in the United States. For years, crypto felt like the Wild West, confusing, risky, and lacking clear laws. The government mostly reacted to problems after they happened, leaving innovators and investors uncertain. But 2025 marks a turning point. The US is finally building a clear, federal legal framework for digital assets. Think of it as upgrading from bumpy country roads to a smooth interstate for crypto. The new administration wants the US to lead in crypto innovation, balancing protection from scams with encouragement for new technology. With nearly 28% of Americans now owning crypto, clear rules are more important than ever. Like traffic lights for cars, these laws aim to keep digital finance safe and predictable. When people know the rules, confidence grows, leading to more users, more innovation, and more investment. The changes this year are the first big steps in building a stable foundation for digital assets. The goal: make the US a true leader on the global crypto stage. Let's see how these new rules are shaping the future. One of the biggest changes this year is the Genius Act, guiding and establishing national innovation for US stablecoin. Passed in July, it's the first major federal law focused on cryptocurrency. The law targets payment stablecoins, digital coins pegged to the US dollar. Only registered, approved companies can issue stablecoins, creating accountability and protecting consumers. The full reserve rule means every stablecoin must be backed by a real dollar or safe asset. Think of it like a coat check. Every ticket matches a real coat. Companies must undergo monthly audits and share results publicly. Strong consumer protections and strict anti-money laundering rules are now required. While some wanted stricter rules, the Genius Act is a huge first step. The crypto industry supports it, seeing clear rules as a way to build trust and grow legitimately. Stablecoins are now safer and more reliable for everyone. This law sets the tone for future crypto regulation. Congress didn't stop with stablecoins. 2025 brought more key crypto bills. The Clarity Act tackles the long-standing confusion over which agency regulates which digital assets. It sets a clear process for defining securities, like stocks, regulated by the SEC, and commodities, like Bitcoin, regulated by the CFTC. This reduces regulatory overlap and gives companies a clearer legal roadmap. The Anti-CBDC Surveillance State Act addresses privacy concerns about a government-issued digital dollar. It blocks the Federal Reserve from launching a retail CBDC without explicit congressional approval. This ensures any move toward a digital dollar is openly debated and protects financial privacy. Together, these acts bring much-needed clarity and safeguard personal freedoms in the digital age. The US is setting boundaries for innovation and privacy. Let's look at who enforces these new rules. With new laws in place, who's enforcing them? The SEC now focuses on clear rules for digital assets classified as securities, moving away from just enforcement. The CFTC is officially the main regulator for digital commodities like Bitcoin, ensuring fair and stable markets. The IRS still treats crypto as property for tax purposes. Selling, trading, or spending crypto is taxable. FinCEN enforces anti-money laundering rules, making sure crypto isn't used for crime. Each agency's role is now clearer, reducing confusion and overlap. This new structure brings stability and accountability to the crypto world. Understanding these regulators helps you navigate the new landscape. Next, let's break down how crypto is taxed. Taxes may not be fun, but if you own crypto, you need to know the basics. The IRS treats crypto like property, not currency. So buying, selling, or trading has tax consequences, just like stocks. There are two main taxes: short-term capital gains, if you sell within a year, taxed as regular income, and long-term capital gains if you hold over a year, taxed at lower rates. This system encourages long-term holding. Taxable events include selling crypto for dollars, trading one crypto for another, or using crypto to buy goods. Simply holding crypto or transferring it between your own wallets isn't taxable. Gifting crypto is usually not taxable if you stay within annual limits. Keeping good records is essential for accurate tax reporting. The rules are clearer than ever, but staying informed is key. Understanding your tax obligations helps you avoid surprises. Let's see how states are handling crypto. State laws can make a big difference. Federal laws are big news, but states have their own crypto rules. Some, like Florida, Wyoming, and Texas, are welcoming crypto. Florida will even invest public funds in digital assets. Wyoming pioneered special banking charters for crypto companies. Others, like New York, are more restrictive. Michigan's proposing new taxes and strict regulations. Pennsylvania even introduced a bill to ban public officials from owning Bitcoin. This patchwork means your crypto experience can vary widely by state. Always check your local laws. They can directly impact your crypto journey. Now let's see how the US compares globally and what's next. Is it safer and easier to use Bitcoin in the US now? Absolutely. The Genius and Clarity Acts have replaced confusion with clear national standards, making the ecosystem more stable. Globally, the US is catching up to the EU's unified approach, while China remains restrictive. The US now encourages innovation within a strong regulatory framework. Watch for the Clarity Act's progress in the Senate and the rise of spot crypto ETFs, which make investing easier. 401k plans can now include crypto, opening the door for more mainstream adoption. Stay informed, do your research, and keep good records. New laws help, but risks remain. The US is now a more predictable and secure place for crypto. The foundation is set. What's built next is up to innovators and users. The future of crypto in America looks bright, with more change just around the corner.